I am excited to introduce the speaker of the hour, Miss Tamara Burch. Tamara, are you with us? Oh, I think she's with us. Tamara? Okay, she was just with us. Tamara. Oh, what happened? Let me see. I think she's texting me here. Tamara? Okay. I don't know what happened. We were just listening to her. We were just talking to her. It says that she's able to talk, but I'm not hearing her if she's talking. Tamara, are you talking to us? Okay. This is very unique. Tamara. Okay, she just said that she's having some sound difficulties, but she's fixing it right now. So while she fixed that, let me just kind of, tell you guys a little bit about today and going forward. At Platinum Real Estate, you guys know that we own our own real estate school. And so some exciting stuff we have for 2021 is we're going to actually be offering more CE credits just like this online. So you guys know, and many of you guys have been following me for years, and we usually have the big hotel and there's hundreds of agents that show up and we offer CE credits and all of that stuff. And we've been doing that since 1999. And we're going to get back to that when COVID allows us to. The only problem is right now, COVID isn't allowing us to do that because of COVID-19. Obviously, we hope and pray that we're able to do that again very, very soon. But unfortunately, as I speak right now, we can't do that. But I have a solution. We are going to get back to all of our CE credits, and we're going to be doing it virtual. So we're going to have live 3 hour, 6 hour, 12-hour virtual meetings just like this, where we're going to actually be able to enter, have training just like this and offer CE credits. So you guys know I believe in coaching and CE credits. I believe in coaching and education because I've learned the hard way. An educated agent is a successful agent. An educated consumer is a successful consumer. So whether you want to buy your next home, whether you want to be a successful real estate agent, knowledge is key. And my goal is to provide that knowledge. And here's the beautiful part. I love to provide it for free. I was asked by an agent, why do you offer so much free education to the public? Because I believe this. I truly believe that our corporation have grown from blessing others. And I never, ever know how that blessing comes back around, but it does. Because what ends up happening is when I give education, when I bless other folk, some way it always come back around, and the good Lord bless us. So I don't try to understand it. I just let it happen. Okay. All right. Wonderful. So with all that being said, let me see if I can maybe get Miss Burch back on this line here so we can get cranked up. All right, there she is. I've asked her to unmute her line.
Can you
Hello?
hear me now?
Yes,
There
Tamara
we
Burch,
go.
how are you?
I'm good. So I'm calling in instead, but I think that'll work just as well. How
Hey,
are
no
you today?
problem. Hey, listen, let me tell y'all something. This is not Tamara's first go round. We have done this many, many, many times, live at workshops, live virtually on these type of Zoom type of meetings. She is no rookie. So, hey, Tamara, I know you can get this thing done. So listen, let me be quiet. Let me turn this thing over. They did not come to hear about me. They come to hear you. But before you get started, Tamara, VP, Vice President of Mortgage and Lending, I want to say publicly, I want to say, congratulations, girl. You're doing it. You're doing it big. You're on point. 2021 is our year. And you know, I always say teamwork makes the dream work. So, hey, your success helps me with my success. Congratulations, Miss VP of Mortgage and Lending. Tell everybody about it. Tell everybody about the new company. And look, it's already working well for Platinum because the stuff you guys are doing over there is wonderful. That switch, I love it. But just take a second and just tell everybody about it because I'm excited.
Well, and you know me, Luther, I'm about service. All the realtors that I work with on your team, not on your team, we know that the customer is the most important part. We're trying to help them realize their dream. And their dream is for them to own a home that they're in by themselves, in with their family or just their pet, whatever the case may be. We're trying to help them realize that. And this is the single most expensive thing that they're going to buy and have asset to, right? So they could potentially be building wealth from it for themselves and for their families. We need to make sure that we're taking very good care of them. So why did I switch? Right there. This company is all about service. My customers absolutely love them. My realtors absolutely love them. Communication, number one. Before we even get into any of these slides, it's about communication. Keeping you informed, keeping your customers informed. You're able to talk right to, we call them MCs, my person who's going to help you get it straight to underwriting within 48 hours. That's amazing. Within 48 hours, we are trying to get them in underwriting. When it comes out of underwriting, we are trying to get them back in for a clear to close within no more than 5 days. So that's my LC. And both of those women, they are on it. They are truly on it, been in the business a long time. They're not talking to a rookie. And they communicate with me, with you, with the client. And I think that's what brings it all together so that we can be smooth. We will have bumps. Of course, sometimes something happens, but it's about catching it as soon as possible, not catching it 3 weeks from now. Let's try to catch that before they ever write an offer, and or if they do, not tell us something, then we are trying to catch that within 3 to 4 days, because our underwriting turn time right now is 24 to 48 hours. And I know I said that because everybody knows how crazy the market is, and it's sitting there, you're hearing 7 days, 2 weeks to get something out of underwriting. Well, that's not the case here. A majority of the business, the majority of guaranteed rate affinity, there is also guaranteed rate. This is more the purchase division. And so the majority of the business is purchase, which is what we are all in. We are here to help our purchase clients realize their dream of owning a home. And this team I have put together is amazing to make that happen. Lots of accountability. And I want you to know you can call me, you can text me. Let's make sure your customer knows what we're doing to help them. If we can't help them today, it is not our place to judge. It is never our place to judge. We're here to show them the path, whether that is today or 6 months or 2 years from now. But we put them on that path, and then they can come back to you, and we can still help them, all their family, everybody realize their dream, working together as a team. So thank you, Luther. I love it here. I know you've already loved it because the customers are coming in and out of closing so quickly. So I appreciate that as well. Thank you so much.
Absolutely. Loving it, loving it, loving it.
Well, let's talk about a couple of changes. We have some definite changes. This is also, and just so I did not do this lightly, spoke to Luther many times before I made this transition, and spoke to them for over 3 months before I made this transition. It had to be a right fit for me and all my customers as well. So we're going to talk just real quick on conforming, but I know that you really want me to get to FHA, VA, USDA. So one thing here, conforming is 620 credit scores, okay? Now, it still has to approve, but yes, we can go down to a 620 for Fannie Mae and Freddie Mac, determining which one they need to be based on their specific scenario. Because if you didn't know, learning lesson here, Freddie Mac will accept if the borrower's been self-employed more than 5 years, we can do a 1-year tax return. Now, they still, of course, have been self-employed a long time, but we are going to look at that 1-year return. So if 2018 was a terrible year for them, then we're just going to take 2019. Or if 19 was a terrible year, well, the next year we'll take 2020. So that is a great tool. I've already used it 3 times so far in just the last week alone, helping customers get in that were turned down somewhere else. And if you're working with self-employed, it makes a big, big difference if we can just drop one of those years if it was the prior year. So that's pretty important. Now you're getting this right now. This is huge. This is going into effect in a couple of weeks here. And I will, if I have your email address, this is going out to you. You'll be getting an update on this week. We are now they've raised the limits and come out with new limits. So $548,250. So instead of $510,400, we are now going to $548,250. So that makes a big difference in avoiding going with a jumbo loan. And we know we all want to try to avoid that if we can. Those have much stricter guidelines. They take longer to close. And a lot of times those rates aren't as competitive as, say, a Fannie or Freddie product. So this is fantastic news. And this will go into effect taking applications in December.
Okay, let's do this now because we got a lot of folks on the line. So I don't want to assume everybody understands exactly what you're talking about. Okay, so so tell us what was the past. You said 510,400 for most conventional. Now it's going up to what?
$548,250. So we all know that little bit, that's going to make a difference in getting somebody into a conventional loan instead of a jumbo loan. So $548,250. Now, if I already have your email address, you and I have already been working, or if you want these updates, you can always text me anytime. You see my number right there on the screen. It's staying up there because I called in. But this email will be going out today or tomorrow. It's all set to go.
Good. Wonderful. So now we can go even higher without having to go into the jumbo products. Great, wonderful, gotcha. Okay, good.
Yeah, so let's get to what most of you I think are here for, and that's the next screen. That's going to be the FHA, VA, USDA. You're really wanting to have that conversation more than anything. So FHA and VA are now 600 scores. Okay, so that's huge. That's going to get that customer in and be able to slide them in when we couldn't get them in before. This was a big, big point for me in making this decision. And what I love about it, absolutely love about it, is a lot of times you hear someone's going to do a loan and they've got a 600 score, but you're like, oh my goodness, the rate is more than 1% higher for those individuals. Now, the rate is slightly ticked up on this, but not a point. So they can still get in and make that happen with the 600 credit scores, which is very, very nice. Now, I do look at those very carefully, make sure we're going to be meeting all those guidelines because they are below the 640 norm that FHA wants, but we are able to do those down to 600, okay? Now, VA is also 600. However, and this is a big however, unless they have tons of assets, VA is most likely not approving that. Their sweet spot still is 620, 640. And if you've been working with me, you know I'm a VA expert. So we do try to still get it approved if we can. If we can't, then I'm going to go ahead, call them, and tell them what they need to do to get that raised up. It may be something simple. Maybe they need to pay off a bill. Maybe they need to add a credit card. And I'm going to get very exact with them, and then I'm going to send it to them in writing so that they have the report, they know what to do, and we can get them in that home. We should help every veteran we can. I read a very disturbing article just a few weeks ago about how most veterans aren't even offered a VA loan by their loan officer. These people served our country. We're free to make any decision we want here, as long as it's legal, of course. You know, we can voice our opinions, and here they are. And what the reason is, the number one reason, is the loan officer didn't know how to do those loans, didn't take the time to learn how to offer that program to their customers, which is just absolutely awful. So our veterans deserve that from us. And the program's fantastic. If you do not know or have not attended one of my VA classes, this is a no down payment loan, right? No mortgage insurance, right? And in addition to that, if they've been disabled, which we hope they haven't, they have no upfront premium like FHA. There's no upfront premium. I just closed a veteran last month, and this individual bought a $228,000 house, got an interest rate of 2.25%, and their payment was less than $1,100. That is the impact that VA has over anything else. So we definitely want to be taking care of these individuals, and that program lets them get into the home. They saved over $700 a month and still bought a $228,000 house. That's fantastic, right? So we do want to take care of them. So 100% program for VA, FHA 3.5% down. Now there are some other. Well, let's stop here for a second. Luther, do you have any questions on these two? Let's just pause for a second. Let's pause for a second.
Let me make this point why this is really, really huge. You know, me and Tamara, we are working with the client right now, and you're going to know who I'm talking about when I say this.
I already do.
She have been looking for a property down in the McDonough area, and now with these debt ratios lowered, that's a huge benefit for her because now we have more opportunities with that debt ratio being lowered. Tamara, I know when the minimum was 640, you were still good at being able to strategize and to get that person with that 600. You was doing different strategies to get the person from the 600 or the 620, and they're real close, they're 630, and they just don't quite qualify. You could use strategies with the credit and do different things to get them boosted up over to get them up over the hump. And I know a lot of my clients, a lot of my real estate agents, you have helped the client that wasn't there strategize with the credit score, and within a short period of time, get them where they're now over the hump. Here's the beautiful part. If the credit score is 600, you know, those folks who was 600 and needed 620, and you was able to get that credit score raised 5, 10, 15, 20 points. Just imagine now, you know, that really opens up a lot of opportunity for our buyers to be able to afford more once now that credit score have lowered and that debt ratio have lowered. I think that's huge. Agents, clients, you guys don't know what a powerful opportunity this brings now. Okay. Now I want to jump in this chat. Questions. Shoot me questions in the chat. Here's a question. It says, Tamara, with this 600 credit score, will they be able to qualify for any down payment assistance programs? Good questions.
That is a fantastic question. In fact, we're going to be covering that a little bit next there. You can see to the right, we're going to be talking about that. No, the down payment assistance program is still putting them at 640. Okay. You're still needing that 640. So what we'll do, you know that it's not our place to judge these customers if they have some bumps and bruises. We all go through life having bumps and bruises, and let's face it, there's some serious bumps and bruises going on right now, right? I mean, I have a daughter who hasn't worked since February because her industry is totally closed. It's not our place to judge these individuals, but it is our place to be by their side and help them reach their goal. So we'll tell them what they need to do, and then it is up to them. We put the ball in their court and let them, you know, try to fix these items. But the key part here, when I talk to these individuals, is they don't know what to do. They don't have a clear path of what to do to achieve their ultimate goal. And, you know, by putting that in writing and giving it to them, they then know this is what I need to do. It's realistic in 3 months. It's realistic in 1 year. And they can then, you know, put that down, figure out how to get it done and make it happen, or extend their lease a little bit, whatever the case may be. Do we have another question, Luther?
Let me see here. Any questions? If you have a question, you can shoot me a question through the Q&A. You can also shoot me a question through the chat. It looks like that we covered FHA and VA. The next part of the slide says USDA and Chenoweth.
Yeah, so, you know, these are just like Luther wanted me to give you some little, you know, little updates here. We can do more in-depth training at a later month. You know, we got the holiday going on. Let's keep this light. We have so many holidays going on, right? So USDA is still 640, but that's a 100% program. And sometimes your customers don't even know that it exists. Now, it is pretty far outside. Unless you're in one of those areas, it's going to be a drive outside of the area. You know, you're going south to like McDonough Locust Grove. You're going north to Cartersville. You're going, you know, pretty far out east and pretty far out west. And so, you know, it's in those areas where it's limited population that you can do 100%. So unlike VA, where it's everywhere, USDA is going to limit you, okay? And if you need some more information on that, you know, you can text me. You see my number right down the screen. I'm happy to help you with that. And then Chenoweth is going to let you go anywhere, okay? It is a 100% program. We do not set the rates for Chenoweth. They are set by Chenoweth, and it is a program that someone can get into with little money. But at the same time, I had a customer get into me yesterday, try to help this individual. They came to me and they had $100 in their bank account. So I want to kind of touch on this a little bit. If you have $100 in your bank account, okay, and you're trying to get down payment assistance, you really need to save some money before we do this. You're going to have moving expenses. You're going, and Luther will say, you're going to have earnest money that's going to need to be paid. You're going to have an appraisal that needs to be paid. Now, I am, of course, more than happy to cover that with them, but realistically, we're going to let them save a little money. Somebody who has $100 in their account needs to take a minute and not buy a house today, but maybe buy a house in a few months from now when they save up a little bit more money, okay? The last thing you want is to write a contract and they don't have the $1,000 or $1,500 that they need to put down. So what's good about Chenoweth, as long as I'm staying in this moment here, is it's for high income earners, right? And for low income earners. The only difference between the two programs that they have is the lower income earners will not pay back that down payment. It's going to be forgiven if they pay all their payments on time. It's going to be forgiven after 5 years. okay? The high income earners can basically have, in old days talk here, a first and second mortgage. They're going to have the primary FHA at 96.5 loan to value. And then they're going to have a second mortgage for the 3.5% down payment. Is it better for them to get a regular FHA than a Genoa? It absolutely is. Okay, they're going to end up with much better interest rates, much lower payments, and a better program. Okay, but if you're sitting there and someone needs to put $15,000 down and they're having trouble getting the $15,000 to put down, but they've never missed any payments, but they have kids and this and that going on, it's hard to save $15,000. It's not easy. I have 5 kids. Every time I turn around, hello, right? So this program will help them get in the home. They can make the payments and they can afford the payments. Then it's still better for us to help them achieve that goal and get into the home, okay? And that's what Genoa is going to be good for.
Okay, let me jump in here because my line is blowing up, and I got to jump in and say, hold up, wait a minute, y'all have really misunderstood something. And look, y'all know your boy, y'all know me, okay? Y'all know me, and I am Mr. Strategy all day. Let me correct one thing, like for real, okay? Because y'all really messed up and my line is blowing up. We do not worry about, we do not suggest how much money our clients have or how much money they don't have, okay? I just want to start that. I'm not going to ask Tamara the questions. Whether you are a real estate agent or if you are a client, do not get discouraged because you only have $100 in your account, or don't get discouraged because you have no money. Let me tell you my personal plan or my personal story. The first property that I bought in my life, I didn't have $100 in my account. You with me? I didn't have $100. My father loaned me the money, right? Look. He didn't even loan it because I could never pay it back. He gave me a gift. Earnest money, you guys. I have negotiated deals where the earnest money was $100. I have negotiated deals where there was no earnest money on the table at all. Okay, paying for appraisals. There's strategies you can do. So here's my points. We'll get this all messed up because everybody's asking me how much money does my client have to have, and what's the minimum amount, and what if my client don't have no money? And look, listen. You will never do a deal if you kick yourself out of the deal before you even get started. There is no minimum. I don't want y'all to think that the client have to have $1,500 to do a real estate transaction, because I have done deals when my client didn't have $1,500. Well, shoot, I did a deal for myself where I didn't have $1,500. I have bought apartment communities with partners, and I didn't have any money, but my partners had money. I did not, and I bought an apartment complex. Here's my point, you guys. As real estate agents, even if you are a client listening to this, okay, you want to connect yourself with the professionals like myself, with Tamara. Let's look at the whole picture. Let's strategize, and I guarantee you we can make a way out of no way. Now, there is sometimes there is situations where our client may have to wait because sometimes we can't make it happen. But on the front end, and especially for this webinar, we don't want to go into it thinking a person have to have $1,000 or $1,500 or $600 to do a deal. And that's what everybody's texting me, or not texting me, but that's what's all over the chat and stuff, and texting me and email and all this stuff. Well, what's the magic number? There is no magic number. Here's the key. Get with a professional, and let's let the professional figure out a way out of no way, right? Because there's a lot of times I have had clients, and I have been a client myself, and it looked like there was no way, but we made a way. Okay. Same thing with the credit.
And that's
the same thing with the
credit. And that's a great
point,
Luther. Absolutely great point, because when we sit there and talk to the client, if I say, how much do you have in your checking account, and they say $100, I don't say, hey, you can't buy a house. I say, Okay, great. So how much do you have in your retirement account? How much do you think you can get from your mom or dad? Or how about a family member? You know, and we go over those things. You know, if there's no family member, there's no retirement account, there's no savings, there's no nothing, well, then we may be presented with more difficult and extremely challenging situation at that point. But Ruth is absolutely correct. There's a process. Once I know how much money they have, the conversation is going to be, here's how much we're going to need. Where can we get this money so that we can close on this home? You know, and we go through all of that. A lot of times they don't want to discuss their finances with you. They want to discuss it with a lender, and that's perfectly acceptable. At the same time, I'm not going to approve somebody and put them in the car with you, or COVID outside the car. You're both driving separate cars. We're not going to put them in the car and have you driving all over town if they cannot buy something. That's the point that's very important here. I have a 98% close ratio for a reason. We're not going to put them in that car with you and put a contract out there if we cannot do it. Could something still happen? Of course, we're all human. But let's start out with the best foot forward to make this happen. Okay? Great point, Lisa.
There you go. Question here. Tamara, what is the credit score required for the self-employed?
620. You're still 620 on a conventional loan and 600 on an FHA loan. There isn't a designation for it being self-employed. Now, with that being said, a lot of times the approval's coming back right now by all the carriers because, as you know, the default rates are rising, and they are rising due to lower credit scores and self-employed borrowers. They're getting hit the hardest. And so they might ask for more reserves, but that's something I cover with them. That means that they have, after the whole thing's said and done, they have 1, 2, 3 months of house payments sitting in an account somewhere. So I do cover with them if that is something we're going to need, again, before you get in your car and drive them around. They'll know exactly what we need to do.
All right, wonderful. Next question says, do you also have non-prime loans or just government and conventional loans?
We do have some non-prime loans. We're not covering those today. We're going to do another webinar with Luther in the new year on some of those products and things that we have. Right now, we felt it is more important to focus on getting out the information of the lower credit scores, the communication, the getting your borrower into the home as quickly as possible, because we know it is a seller's market. We don't want to take 45 days to get a customer done. You know, we need to be competitive. We need to be out there getting it done in 30 days or less. In order to make that happen, and also looking at each borrower. Today, I issued multiple approvals for borrowers today, where I gave them an FHA approval, which is a better deal for them, a much better situation for them. But I also gave them a Fannie Freddie approval so that they could go out there, and if they had to be, they could be competitive under a conventional loan, but knowing they really needed to try to stay within the FHA parameters. And it's things like that that your customers are going to appreciate, because when you're putting in an offer and there's multiple offers, you do want to put your best foot forward. Even though it might be better for them under FHA, if they have no chance of getting their dream home, then we need to try to do it under a conventional program.
Good. Have another question here for you. The question says, what determines high/low income?
You know, each area is very different. You can actually Google median range of income for Atlanta, and it'll pop right up for you. But typically, we're looking at individuals depending upon how many children, under 80,000.
Okay.
Anything under 80 is going to be more of a mid-level. Anything over is going to be more of a high level. But we do not guesstimate, estimate, nothing. If they're going to go for a specific program, before the approval letter goes out, I have pulled up that information and they've qualified based on that income for that specific location, or they don't.
Good. Good, 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 good. Question here. Um, it says, do you not pay back for 5 years with low income?
That's correct. That's absolute. So with the 5-year, so, somebody, I just proved somebody that had only making about 40,000 a year, a little bit more than that. And so of course their program is forgiven after 5 years if they make all their payments on time. Okay. Where, if they were high incomes, they're going to have to pay it back over a 10-year period, starting on day one.
Good, 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 good. Next question here says, what are the credit scores for Chenoweth?
640 or higher.
640 or higher for Chenoweth. Okay. Very, very, very good. And then somebody says, hey, Luther, do you archive your webinars? Everything is recorded and archived. All right. Listen, we're gonna move on here. Chat line is open. Question is open as well. Again, chat line is open, as well as the Q&A is open. Shoot me any questions that we have. And it says Tamara Burch. Tamara, tell us about, it says communication, expectation, turn times, and seller market. Talk to us.
So this is where we kind of touched a little bit on this. This is probably next to the 600 credit score. This is the #1 thing that you should be looking at, whether you're working with me or someone else. Make sure that you are getting the communication that you need. If you are texting that person, are they answering you? Or if you're calling that person, they might be on the phone, right? We're all busy, it happens, but are they calling you back? If you're not getting calls back timely, I had someone say, well, my lender tells me they'll call me back in 72 hours. What is 72 hours? Are you kidding? The house is already sold in 72 hours, right? Okay, now unreasonable calling me at 10 o'clock at night. I'm asleep. I'm out like a light at 10 o'clock because I'm up and I'm working at 8 o'clock in the morning and already on the phone and had talked to 10 people and had 3 cups of coffee. So, the communication is paramount. If I call your customer and they don't answer and I have to leave a message, I am texting not only them, but you in a 3-way text going on. It is important that I left a message. It's important that they know I told you I left a message. I'm going to do that a couple of times, but then we're going to be like, hey, we need to call this customer. But it isn't about just communication before they find a home. It's about communication after they find a home. If I get an appraisal in and it's coming in light, I'm not waiting hours to tell you. There's nothing worse than a slow no. We've all heard that statement. A slow no is just absolutely horrible news, but you need to tell somebody quickly. The appraisal came in, it came in $8,000 low. Well, the sellers have already agreed 15 minutes later to lower the purchase price. Okay, why? Because they knew within 5 minutes of getting that and they weren't surprised. They know it's a seller's market. Don't run and hide. Get on the phone, let's get it handled. And the point is, me and my staff, we're telling you anything we see, we're telling you right now, immediately. Communication. Several of my customers have recently been awarded contracts. Why were they awarded them? Okay, because the agent, with one of your platinum agents who's probably listening right now, she's so excited. She just got a contract after showing 6 houses. But the reason is I get on the phone. If you ask me to do it, I'm going to do it. I have zero problem picking up the phone and talking to that listing agent. Or if you tell the listing agent to call me, because I get approval from your customer to do it. This is a seller's market. We need to think outside the box. I am telling that listing agent, hey, this borrower is fantastic, not affected by COVID. I know you have 10 offers, and this one is the one you want to accept, because not only do you have a customer who's fantastic, you have a lender who's going to communicate with you. I'm going to tell you the appraisal's ordered. I'm going to tell you the appraisal is in. I'm going to tell you we're in underwriting. I'm going to tell you we are out of underwriting. The items look super duper easy and we're excited. That is what the seller agent wants to hear, because they're going to call a couple of the lenders. And the last couple that came to me this week, the agent told me the other lenders never even returned their call. That is not communication. In fact, one of my customers got their deal this week, and I was told they were $1,000 less than the other offer, but they gave it to them because of the communication level. It's important. It's very important in a seller's market. What's important, period, whether it's seller or not. So turn times are 30 days. If I can close it quicker, we'll close quicker. Sure, absolutely. But I do need the contract at 30 days, okay? Which is still very fast in this particular market, okay? With it being a seller's market, we know we need to get it done, okay? If you're going the route of USDA or Genoa, then that's gonna add time, because USDA has to approve the loan and Genoa has to approve the loan. So it does slow things down, okay? But if you're in a USDA market, this is not a surprise to them. These sellers and these sellers agents, they already know that. That market, they're in it deep, they understand it, and they're not afraid to take a USDA contract, okay? So it is about communication. Now you wanna pick up the phone and you wanna call Allison and ask her a question while she's working on this. You pick up the phone, you call Allison, you ask her a question. That is what she's there for. She's there to help you. At the same time, you know you're texting me, you're emailing me, you're calling me, and you're getting that return. And I know I spent a little bit of time on this, but it is so important. It is so important, especially if you're working with first-time home buyers. We need to hold their hand. They're already nervous, they're already scared, and we need to hold their hand a little bit more and be understanding that they're nervous and scared on whether they're closing or not. If we think back to when we bought our house, nervous, scared, right? My very first house, I'm buying it, I'm 21 years old. I'm sitting there going, what in the world? I'm buying a house at 21? Are you crazy? You know, nervous and scared. So we need to keep that always in the back of our mind while we're talking to them and helping them. So I just want to see if there's any more questions. I know we're running out of time, and I don't want to prattle on forever because Lord knows my 5 kids say I can.
Okay, all right. Okay, good. So question, Tamara, do you have a loan program where the credit score is looked at for one spouse, but not for the other? For instance, if a husband and wife, yeah. So for instance,
that's a great question. I know where you're, I know exactly. Yeah. Sorry, Luther. I didn't mean that. I know we got a little lag thing going on here. And we used to have that back in 2007, right? If you've been in the business long enough, you know that we had that back in 2007, but that is not the case. No, it takes into account both borrowers. Fannie, Freddie, FHA, VA, USDA all follow the same guidelines. And then it's going to be the middle number of the 2 borrowers, lower of the 2.
Okay, very good. I don't think that we have any other questions. Any other information? Okay, Tamara Burch, let me give everybody her phone number, 770-896-5001. Again, phone number 770-896-5001. Phone number is right there on the screen. If you have called in via cell phone, get your pen right now. That number is 770-896-5001. Email tamara.burch, that's TAMARA dot BURCH at GRARATE.com. So GRARATE.com. That's Miss Tamara Burch. All this information obviously is in the Platinum Real Estate Portal for all of the Platinum Real Estate agents. Tamara, once again, great job. Thank you for what you're doing for us. Thank you for what you're doing for the community. We do appreciate it, and we will definitely have another one next month. You guys, we have Tamara each and every month come in and to give us some great education. Tamara, thank you very much.
Thank you so much, Luther, and I hope everybody stays safe and has a wonderful holiday season.
Very good. Now, real quick, you guys, I am going to launch a poll. I've just launched a poll. You guys, please, we work for 5 stars. We love 5 stars at Platinum Real Estate. How would you rank this this webinar? 5 being great, wonderful. I enjoyed it. I learned something. It was the best thing ever. That's what we work for. After that, we have 4 stars, 3 stars, 2, and 1. You know we are working for that 5. But please answer that poll that's on the screen right now. How would you rank this webinar? Give us some feedback. Give us some feedback. How would you rank this webinar? It's live. I'm going to leave it up there only for the next couple of minutes. So please, ma'am, please, sir, please give us some feedback. How would you rank this webinar? Hopefully you loved it as much as I did. It was a great webinar to me. Every time Tamara comes, I love it. I always learn something new. And listen, you will receive an email. You will receive a text message asking you, how would you rank this webinar? We work for 5 stars. When you receive that text message, when you receive that that email, please, ma'am, please, sir, we love Google reviews. Please give Platinum Real Estate a 5-star review. Would absolutely love it and would appreciate it as well. I know that the webinar is free, but if please, ma'am, please, sir, for a free webinar, I think that both of us can agree that indeed it was worth 5 stars when it's free. I'm sure you got your money's worth and then some. Why? Because this thing was free. Y'all with me? So please show us some love when you get that that request for that review. Now, last but not least, do not forget upcoming webinars, upcoming training events. You can always find it at my website, lutherragsdale.com. Please go right now for the upcoming events. You can go to our website at lutherragsdale.com. It's all right there. Go now. I will tell you, you need to register. Registration is always required, and my seats go very, very fast. So please, ma'am, please, sir, go to lutherragsdale.com, register for the next one. You guys know we do this every week. We have great education. We have something every week. Go to my website right now. Check it out. Register for the next one. Hey, as always, thank you for your time. Thank you, Miss Tamara Burch. Thank you to everybody. I appreciate it because you make Platinum Real Estate the great corporation that it is. And I am proud to be the visionary, the CEO of the firm. Thank you. May God bless you. We will talk soon. See you later.